Hey everybody, today we're going to be doing another ETF review, and today we're going to be looking at SPYD, which is the SPDR Portfolio S&P 500 High Dividend ETF. What is this ETF? It measures the performance of the top 80 high dividend yielding companies within the S&P 500 index, so we're going to be looking at large cap companies that pay a decent dividend. As usual, we'll start with the expense ratio, and as we can see here, it is 0.07%, very, very low. That means for every $10,000 that you have invested in the fund, they are going to charge you $7 per year. Very much on the low side of expense ratios. This will be a passive fund, which means it's only going to be rebalanced a certain amount of times a year. We can also see that it is a $4.6 billion fund, so it has plenty of money under management. That means a lot of people are putting money into this, which means a lot of people trust it. Is that for a good reason? We're about to find out. After that, let's take a peek at the yield, and as we can see, we are sitting at our distribution yield, which is the yield over the last 12 months from all of our distributions put together, is just under 5%, which is very nice. You're going to get about 2% from the S&P, give or take a few tenths of a percent, so we're doing well over twice that. That's very nice to see here. Similar funds, you might have something like, for example, SYPD, which only pays around 3%. You have some others in there that are around that. So this is definitely on the higher end of the high dividend ETFs in terms of yield, so that's nice to see. Let's see if that yield is worth it, though. We can go back and look at their yield history, the distributions, and we can see, like other dividend ETFs, the amount you're going to get is going to vary depending on the time of the year. As we can see right here in June, we were getting just under 40 cents a share, whereas the previous distribution was 63.5 cents. So when you're looking at these kind of things, you want to take these four, well, in this case, these two numbers, and compare them to the corresponding times last year, and we can see that they are indeed higher. So the dividend is growing, which means the underlying companies are paying more as a dividend. That's really what you want to do when you're looking at distributions here. Don't look quarter to quarter, because it's going to be skewed based on companies coming in and out of the fund on their rebalancing, as well as if companies are raising their dividend and the exact timing. So you want to look at what the dividend yield was currently versus what it was a year ago, and in this case, it's pretty good. We're definitely seeing that the yield is going up, and if we go back really far, we can see that over time the yield has increased. So that's good to see here. Next, let's take a peek at the portfolio. And if we go down to the holdings, we can see our top 10 holdings here. A lot of well-known names. You've got Pfizer, you've got Seagate, you've got Newmont Corporation for some gold exposure, you've got Chevron and Energy, HP, plenty of companies that you know about that are large cap companies. They are in the S&P. These are a lot of things you're going to know. So there's not going to be anything small here. No real risks of bankruptcy outside of really crazy things. So you're not going to see really large swings day to day with this fund outside of the market in general. Next, we can go down to our sector allocation, and as we can see here, we are mostly in utilities, finances, and real estate, but we are also pretty well diversified into energy, consumer staples, and then we start to go down into the 6% for others, down to discretionary at 3%. So pretty good diversity here. You expect to see financials, utilities, real estate, energy. Those companies usually have the largest dividends, so it makes sense that they're going to make up the majority of the fund. But if we go back up and look, we can see that nothing makes up a ton of the fund. Even in our top 10 holdings here, the largest is Pfizer at 1.3%, and our 10th largest is at 1.28%, so almost the same amount in terms of weight. That's very nice to see as well. After that, we want to look at our performance and see how the fund has actually been doing. So if we see here, we can look back over year periods. The fund is not 10 years old, so we're not going to get a 10-year performance here. That's unfortunate, but we can go from inception, which was just under 6 years ago. From then, we see it did about 10.5%, which is actually about what the market does. So if you're looking for something that, if you're looking for dividends but still want to make about what the market does in that time over a long period, keep that in mind. This might be something to look at. We can see that last year it did incredibly well, of course, as everything did, while over the 3 and 5 year periods it was down a bit. So keep that in mind. Last year is a bit of an anomaly. Next, let's compare it to other funds. Let's compare it to the wide market and see how it does. For this, we are going to be looking at 3 different portfolios. SPYD will be our first portfolio, making up 100% of course. The same for portfolio 2 and 3, which will be SEHD, which is a competitor doing roughly the same thing, and VOO, which is our S&P 500 control. Now, if we go down and look, we can see that there is a bit of an issue here. Running from about 2016 up until just before the crash in 2020, the funds were all doing about the same. Sure, you have about $1,000 difference between the S&P and this portfolio, but looking back over it, that's really not that big of a difference. A little bit of a divergence, but if you're looking for yield, that's really okay for you. However, we can see that during the downturn, their drawdown was much larger than the other two. While the other two did about 20%, this dropped 36%. That's a very large drawdown. If you had 10 grand in there at that point, you were going to drop down to about 6,500, whereas with the others, you'd be sitting at about 8,000. Keep that in mind if drawdowns are important to you, if volatility matters. Then we can see that as our other 2 funds, SCHD and the S&P 500, recovered much more quickly than this has, and as we can see, it's actually been on the downslope recently. So, as we can see, versus competitors and versus the wide market, it just doesn't do as well. So what does that mean? Should you buy it? Is there anyone who should buy it after seeing this? Yes, there is, but it's going to be a very limited pool of people. If you're looking for any real kind of growth, you might as well stick to the S&P 500 or a different dividend fund. As we can see here, there are others that are going to do better than this. If you're looking for dividend appreciation, again, you're probably going to be able to do better than this. However, if you are just looking for yield, say you're retired, say you're just someone where income matters to you more than anything else, then this might be something for you. As we saw at their roughly 5% distribution rate, if we can actually find it, there we go, 5%, 4% over the last 30 days, still very nice. Between 4 and 5% is very nice. You're gonna be hard pressed to find a lot of dividend funds that do that well. If yield is all you care about, this might be something to look about. If this is just money you're going to put in, say, for the next 20, 30, 40 years, maybe you've just hit retirement or you're about to hit retirement and you don't really care about market ups and downs and you just want to get yield, this might be something for you. This could be your equity holding or part of your equity holdings. However, if that doesn't sound like you, if you're looking for any real kind of capital appreciation over the long term, if you're looking for a lot of dividend appreciation, I would tend to steer clear of this fund. There are better choices out there for you. Even the wide market is a better choice. But if you are just looking for yield, this is something to keep in mind. Compare it to some other high income vehicles, and this might have a spot in your portfolio. I hope that helps, and thanks for watching.